Hey, it's the FinTech Newscast. My name's John, and with me, as always, is Mr. Perez. Welcome to the podcast.
That is Steve to you. Thank you very much. Good to be here.
Yes, yes. Well, I'm going to refer to you as Mr. Perez just for this episode because of our very special guest we're lucky to have this week, the Steve Boms, the Executive Director at the Financial Data and Technology Association. Welcome to the podcast.
Very happy to be here. And I can be Steve B and Steve Perez can be Steve P. Although I don't know that that
No,
makes it a lot easier.
no, it's
Oh,
actually
I
more
thought you were going to go
difficult.
with A and B. Or yeah. Okay. Well, what we've seen in the news lately, just to start off with, is agentic trading, some announcements being made. And this is kind of surprising. I guess I knew this was going to happen, but Robinhood announced that they would use agentic AI or make that available for trading on a certain account. You can set aside a specific amount of money, which you better do in this case, for the agent to do its thing. Would you trust anything like that, Mr. Perez?
I think I would, especially if I gave it very clear instructions and a small pot of money to work with. It probably wouldn't work with my entire portfolio, but I actually do like the idea a lot.
Really?
I think
Why?
it makes sense.
Why do you like that? It seems kind of scary to me.
It seems scary, but I think that, we were discussing before we began recording that, there's sort of a massive difference between rules-based trading and just agentic trading. With rules-based trading, right? You say, buy at this level, sell at that level, whatever. We have all these triggers. Once you have an event that actually falls outside the rules you've created, the whole thing sort of breaks and stops. So I like the idea of using agentic in a way that will understand, my trading patterns, my goals, etc., and make decisions based on that without a whole lot of guidance from my side, and also looking at things like unstructured data as well. So I'm all in. Sign me up.
More faster insider trading. I see your point there.
More faster
No,
insider trading. Yeah, I
no,
do
no.
wonder though.
Mosaic
Yeah, that's
theory.
actually
Mosaic theory. Yeah.
which is
It's
what.
Oh, that's you can put together pieces of public information to have trading positions that look like they're based on non-public information, but you put together so much public information that that's legal because that's just your efforts in putting together data. So yeah, what you're saying about unstructured AI or unstructured data, so it could go out there and pull information kind of put together that something non-public is going to happen based on the public data that and maybe an AI can detect that. And so we
Exactly.
have to rethink about what's public and what's non-public information at that point.
Although, John, if AI can detect it and now AI and agentic trading is available to all of us, is that not public information at that point?
Yes, yes, yeah. That's why that's the defense is it's called mosaic theory that you just put together all the pieces or your AI did, and so the AI should go to jail, Your Honor, not me. It was the AI that did it.
How are these agents actually liable if they do something that's illegal? Like if they actually say that you work for X company, or to sort of use your trading in a, or trade in a way that would be considered illegal or unethical. Does that mean that they're liable, or are you liable? It's sort of like the
I,
driverless car thing. Like who's liable for that?
I love this, TP. We're spending so much time thinking about this at
Yeah.
FDATA. So,
Yeah.
look, I guess the way that we think about it is the concept of agents as a general matter in financial services are not new. They've been around forever. It's just this is a much different context. They're computerized, they
Mm.
proliferate, they think and act more quickly than we do, and there are fears that will go beyond the bounds of what you've instructed them. But there's actually a really fulsome set of liability, fiduciary responsibilities, and responsibility for agents in financial services law and regulations. And so a lot of the work we're doing right now is like tracing, are there any gaps in the agentic commerce age that don't fit based on where agent law has been forever? But liability, I think, from our perspective, isn't one of them, so long as they are licensed and registered like any agent would have to be in any financial services context.
So Robin Hood ends up going to jail. That's what I heard out of that. So- but they're not the only one. People are applying this to a lot of different situations. Trading, obviously, a big thing, and kind of an extension. I mean, I've read so much about algorithmic trading, which is very, very complex. So this is just taking that into that next level. Those algorithms are very complex, so I don't know how much more the agentic aspect of that can add to it. But also Gemini's rolling out an agent for crypto trading, and Stripe is rolling out something as well. You can set up an account called Link and put the amount of money that you want there. This can be an agent to, this is more like a consumer side, but on the commercial side, be like your buying agent and automate a lot of that process for your business. That I can see a little bit more. I could trust it with that, but I guess I'm a failure of imagination to go beyond what an algorithm, a very complex, algorithm could do versus an agentic AI.
Yeah. Hey, I'm curious, Steve. How much of the work you do is actually looking to find ways to create guidelines or rules for companies that engage in this behavior? Is that what you do within your organization?
It's part of it, but I'd zoom out a little bit, Steve, right? So, when we started FDATA about 9 years ago, the concept was there were not any laws or any recognition anywhere in North America that your data belongs to you. Like, doesn't matter how you were going to use it,
Hmm.
right? Whether it was for an agentic or non-agentic use case, an algorithmic or non-algorithmic use case, you just didn't have that right. And so where we started was we need rules, laws, regulations that assert that right. So if you want to use, for example, Mint.com or Credit Karma or Rocket Money just to create a budget for yourself and put everything in one place, you could do that. Over time, we were able to get those rights asserted in North America, although the US experience has been a little bit zigzaggy over the last couple of years here. But the way that consumers interact with that data now that they have those rights, Steve, like that's where we're now trying to track, to use the old Wayne Gretzky quote, where the puck is going. And
Hmm.
agentic commerce and agentic use cases is absolutely where the puck is going. And it may even be where the puck already is. So right now, that is a big part of what we're doing is I have to admit, we're kind of in the initial phase, which is scope where the rules already are and how they apply, then do a gap analysis to figure out what additional rules might be needed. And then from there, have recommendations to government about what we think the appropriate additional guardrails or requirements should be in this brave new frontier.
When you say financial data, is that sort of your transaction, your credit score? What's included in that world of data?
The way that it's been commonly interpreted is identity information, transaction information, and some other characteristics that are non-proprietary that a financial services entity holds about you in a checking, savings, credit card, investment, or loan account. There are conversations in other jurisdictions, like in the UK or even Australia, where it's a consumer data right that's beyond just financial services. So wherever the data lives, regardless of what the data is, if it's not proprietary, and a credit score is proprietary, right, because the
Hmm.
bureau is using their own algorithm to spit out a number about your credit worthiness. But if it's just the raw data, that belongs to you. So in North America right now, we're predominantly talking about bank account data.
Hmm.
Um, but I think over time that will go more from open banking to open finance to smart data, like we're seeing in other jurisdictions.
Interesting. Is there any of that data portable right now, or is there a push to sort of make that portable? Because I would love to see what all my my FI is holding in terms of all my data, what I've spent money on, my how my score has changed, and all that. I think it'd be great to see how I can use that to sort of inform my financial health or my financial decisions going forward. So is that portable
You
data
think
right now?
you think you live in Europe, Steve?
Uh, you know,
much much
someday.
as I like to sometimes myself think about living on the Riviera some way. Look,
Yeah.
the truth is that data is portable right now. It's just not portable through any kind of like standardized means. There's been a lot of industry work in financial services to standardize how that data flows. Um, so you can bring it to a third party. That's predominantly happened through screen scraping, right? Which is where you hand over the credentials to your account to a third party. The third party logs in as you, takes the data it needs, and then provides you the service. It does not take somebody who spent their lifetime in this industry to know that that's not the ideal way of getting data and making data portable for any number of reasons. And so there's been this movement to APIs over the last 7, 8 years or so. And that's happening, and it's happening slowly. But still, we don't have any kind of regulated path for how that data would be made available through APIs. And that's why the open banking framework in Canada that just received royal assent earlier this year is such a big deal. And it's why the Section 1033 rule in the US, which had been finalized and is now being recontemplated, was such a big deal as well, to bring it all into kind of a standardized framework.
So does this feel like plugging a leaky boat sometimes? You find one way for data to that needs to be protected, and like agentic AI comes out or something new comes out. How are you just prioritizing the major plugs
Well,
that you can do?
I suppose, look, not to get too philosophical about it, John, but look, the entire kind of regulatory universe or the policy universe is always reactive, right? Almost by definition. You know, policymakers can't see what's going to happen sometimes a day from now, let alone 10 years from now. And so, you're constantly kind of reacting to what you're seeing and trying to balance innovation with the appropriate guardrails to make sure nothing bad happens. And in some cases, reacting to the bad thing after it's happened to make sure that doesn't happen again. And so, like, I think a pessimistic view would be it's you're putting your fingers in the hole of the dam every single time. I think a different way to think about it, though, might be um, it's not a dam so much as like you're shaping the flow of the river, right? And you're trying to
Mm.
navigate it in this valley in a way that, makes sure that the crops are fertile and that the livestock have access to water, but isn't flooding a village, right? Or creating any harm. And that is a very, very, very difficult thing to do because there's all manner of variables, and maybe there's a storm and maybe there's a flood. But you just try to steer the water as best you can. And I will admit that's the first time I've ever used that metaphor, and I'm not, I'm not sure how appropriate it
You
is.
play.
It
Is this
works.
a video game kind of background? So, yeah, so you do what you can, and we have been a little bit pessimistic. Well, here on the podcast anyway, about how effective you can be, what can be done, especially this very anti-regulatory, well, in some ways, environment, at least in terms of protecting, the least lately. Can you tell us some of the wins that you've had to kind of offset the things that maybe we're not seeing?
Well, look, let's start with just like adoption, right? I mean, that's the most, that's the best line of sight into how consumers are interacting with this. And like people are voting with their thumbs all over the place. Our members today are providing services to more than 100 million American accounts and more than 7 million Canadian accounts today, in the absence of any kind of regulated framework for this. And so people want these tools. People need these tools to help manage their financial lives. Um, it is also the case in the US, where I've alluded to this kind of up and down on the open finance rules. Um, the administration, which has a decided deregulatory bent here in Washington, initially was going to just scrap the entire thing and say, it's up to the market to decide. And then 6 weeks later, they came back and said, actually, we've looked at it and we do think that there is need for regulations. We haven't seen what those regulations are going to be just yet, but I choose to look at the positive and say that the acknowledgement that regulations are required, I think, is an incremental win.
Yeah, it's funny how there was good reasons all these things were in the first place, and once you crash the car, you're like, oh, yes, we do need airbags and seatbelts. But
Yeah, although I'll
Exactly.
tell you,
Yeah.
John, like
Yeah.
I started my career on Capitol Hill working for the House Financial Services Committee back in the early 2000s. I was there during the big mortgage bubble building. I was there when the bubble burst during the financial crisis. I was there during Dodd-Frank. I left after Dodd-Frank. And I remember thinking, like, just to go back to an earlier point, the role of government, the way that it's been structured, is it is by definition reactionary. It's always going to be reactionary. In the US, um, the view that we've taken in our society is, industry will innovate and government is there to just kind of make sure that things don't go too far on either side. And so I don't know that that's necessarily a bad thing in principle. Because the other part of that is true too. If government tries to get out too far in front of itself, then it may actually stymie really cool, innovative things that can help consumers.
So I understand, Steve, that you're a big proponent of basically eliminating screen scraping and sort of moving more towards the API based way of an API based way of transferring data. What is the downside of screen scraping, and who's sort of dragging their feet to move towards again more of an API type space?
One point of clarification, Steve. So I'm not anti screen scraping. I just think that there are better
Mm,
ways and more efficient and safer ways of getting data, APIs being one of them. I think we also just have to
yeah.
be honest. Like for many consumers, particularly those who don't have accounts at the largest financial institutions, screen scraping is the only way that they can use third party tools, full stop. Right? I
Mm,
mean, it's up to
yeah.
the bank to decide whether or not to build an API. And if they built an API, whether to make that API available. I think if
Yep.
you asked any FDATA member, all of them are fintechs, right? Like, what is your preferred way of getting data? Do you want a screen scrape or do you want to get access through an API? I would bet all the money in my wallet. Every single one of them would say, give me the API every single time, right?
Yep.
And so it's not a technology debate. It's really about a market structure debate, right? Which is like, who
So
should decide if a bank has to build an API? And if they build it, who gets to decide what fintechs can and can't access data through the API? On what terms? Is there a fee or is it free? Is it the consumer's data or the bank's data? And so, look, in a vacuum, it's not ideal to have third parties get your bank credentials, right? I mean, those are sensitive pieces of information. You don't want to give full access to your account to anybody who doesn't need it. Um, Going back to our agent conversation, right? That there are fiduciary responsibilities for agents that may not convey if you're just giving your credentials over. Um,
mm,
you can't necessarily control access with screen scraping the way that you can with APIs. You can see who's coming in and what data they're taking. With screen scraping, once you give me access, I've got the keys to the kingdom. I can see everything. And there's a
yeah.
contractual agreement that I'm only going to take what I need. But, I'm to an earlier point you made, Steve, like, how do I know as the consumer? And I'm taking your word for it. So APIs are by far, from a technology and security perspective, the better way of doing it. It's also true that they're more reliable. They're up more often. You don't have to reprogram your screen scraping agent every time the website gets modified with an API. But this fundamentally comes down to APIs are not nearly as ubiquitous a replacement for screen scraping today.
So what is the holdup? Why aren't most FIs moving towards an API based model?
Probably a better question for them, to be honest, right? But I'll tell you, we talked to community
There's got to be
banks.
cost somehow.
Yeah, well, that's right. So look, if
It should
you're
be
a
cost, yeah.
huge bank, you've got the resources to build an API, right?
Um,
But if you're a small community bank with a handful of branches in a state or a community, like building an API is number 10 on your priorities for your IT budget for the year, right? And so like,
right.
the question becomes like, will this help me make more money or grow my deposit base or lend more money? And the truth is that it probably helps you as a consumer. Like you want to enable your customers to share data from their other accounts so that you can do cash flow underwriting
Hmm.
or other cool things with the data. But it's not going to be a
Yeah.
priority from a data out perspective, right? And we also have, as you both know, like this really diverse financial services ecosystem where we've got like 7 or 8,000 different financial institutions in the United States. And the bottom 7,500 of them have collectively, maybe 10 to 15% of all accounts in the United States amongst all of them. And so, what it would take to get every consumer account onto an API is each of these really, really, really small institutions building the APIs.
Mm,
The CFPB, the regulator in the US in 2024, basically said everybody except the very, very smallest, meaning less than 850 million in total assets, has to build an API, right? And the conclusion I think they drew by inference was they're not going to do it unless there's a regulatory mandate that they do it. And that was how they were going to hasten this transition over to APIs in the US. But the Trump administration CFPB effectively struck that rule. And so right now there's no mandate. And it's really just a commercial incentive or disincentive that makes the decision of whether or not a bank is going to build an API.
so it's just cost,
If they
basically.
feel
Yeah.
like it.
Yeah.
Yeah. What kind of things do you see with fintechs? Let's say, I guess smaller companies, the technology side, that that they should think about more, or have you seen some things where you're like, I wish these guys starting up would X.
You know, I might take the question a bit of a different way, John. So I think like there's what's always impressed me is like the fintech ecosystem is evolving to where consumers are demonstrating a need that isn't being met by the market incredibly quick, right? And banks would say it's because they don't have the same regulatory overhang as we do, and they can move quickly, and they don't have the OCC in their office every day asking them questions. Fair enough. Uh, but like cash flow underwriting is a great example of this, right? So, a number of firms, including Prism Data, which is a great FDATA member, was looking at the market and they said, a lot of people are either thin file or no file, and they're perfectly capable borrowers, right? And banks want to lend them money. It's just that if you looked at their traditional credit score or their credit report, like there's not enough history there. But if we could look at their transaction data and show them to the bank, like, yeah, Steve paid his rent every month on the first of the month, right? And here's 5 years worth of data showing that I never missed a payment. And you can kind of build an alternative credit profile there. And so there was a need in the market and they found it. Now they're providing that to banks as an additional piece of information on top of traditional credit reporting. I think the thing that I would flag is the data access piece is infrastructure, right? So, when we're talking about the use cases, we're talking about the cars on the highway or the motorcycles or the buses or, whatever the vehicle is. The data access piece is the highway itself. It's the on-ramp, it's the off-ramp, it's the speed limit. It's like how many lanes are on the highway, right? Are there hours you can't use the highway? Are there tolls that you have to pay? That stuff isn't really sexy, right? But it's the thing that governs whether or not the use case can actually come to market and how much volume it can do and what kinds of cars it can build. And so I'm biased, but I would say, having spent a long time thinking about this, fintech should be thinking about that because it's a very, very open question right now in the US particularly.
I understand that also. It seems like Canada it seems to become sort of embracing an open banking framework in a way that the U.S. maybe is not as well. Are they sort of on par in terms of their journey to embrace this framework, or how would you differentiate the approaches in Ottawa versus in Washington in terms of
Yeah.
open data and a more inclusive financial services space?
So Canada took a really, 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 really long time, right? Like I vividly remember in 2017 having conversations with the Canadian Department of Finance about, this is really something you should do. The UK is about to do this, and the G7 is really moving at pace. You're going to fall behind. And in budget 2018, the Canadian government basically said, okay, we'll do a study. And that kicked off like a formal process that is still happening even as we speak today in June of 2026. Having said that, I would say over the last 18 months, Canada has leapfrogged the US in a number of important ways, right? So I alluded to earlier, the Consumer Driven Banking Act received royal assent earlier this year. Whereas the US was looking at open banking in the 1033 rule, Canada's regime is open finance. And by that, I mean it's insurance will be in scope eventually, right? Access will be in scope eventually. Investment accounts are in scope under the first phase. It's more than just bank accounts, right? And so that is, I think, the most ambitious first phase of open banking that any G7 country has come to market with. Now, it still has to be implemented, right? But the idea of it and the framework of it, I think, is quite advanced. I think the second thing that I would say is Canada is unique in that it's the only jurisdiction where I've worked with policymakers where the main reason for doing it was not competition or lower prices or innovation or, people have needs. It was a safety and privacy issue. It was screen scraping. We don't like screen scraping and we want it to stop, right? And again, like everybody is aligned. That's probably right, except that is a feature of the system, but not the reason to do the system. And so one of the things that we've been really interested in Ottawa is like trying to push the narrative of like, yeah, you'll get that, right? And that's a benefit of the system. But the real reason to do this is competition, right? There is a highly concentrated financial system in Canada, perhaps more highly than in any other G7 country, with maybe a couple of exceptions. You've got a real opportunity to make it more competitive, right? To bring more choice and more products and more innovation to the market. That's the reason for doing this. So it's been kind of a cultural distinction in addition to a regulatory distinction.
I'm curious. You mentioned earlier sort of the distinction between open banking and open finance. What is that? Just the inclusion of insurance in the latter?
So open banking in our very geeky parlance is core bank accounts, right? So checking, savings, credit card, maybe some loans. Open finance is like the full scope of accounts that make up your financial life, right? So insurance,
Mm.
investment, pension, retirement, um, basically anything where if you were going to put into a PFM tool, a personal financial management tool, like I want to see what I have and see what I owe. Like I want to see my full net worth and the whole holistic view of my financial life. Any account that you would need to put in there in order to understand it.
Mm. It's funny you mentioned PFMs, and it seems like back when I mentioned that I used to live in DC, and I remember that the Whole Foods on 14th and I think P or so was my biggest spending account on my Mint.com app because I used to go there not only for shopping but also just to get to withdraw some cash. But it seems like tools like Mint, etc., and others whose name I forget now have sort of fallen by the wayside. Is there anything you can attribute to the fall, at least in my perception, of PFMs? Why do they seem to be less ubiquitous now than they were, 10 years ago or so?
Well, first of all, a moment of silence for Mint, which no longer exists, but
I
was
was
kind
going
of
to
Yeah,
my
say, yeah,
my entry into PFM world, and like I was a devoted Mint user. I loved it, right? I found it very
yeah,
addictive. What I would say, Steve,
it's
is like
great.
I don't know that they've necessarily fallen off, right? But I think like that was kind of fintech 1.0, right? It was just like everything I have, everything I owe in one place. And then over time, consumers began to expect that you would get more out of that, right? So like, you see everything I have and
Mm,
everything I owe. Now what do I do, right? Like help me get
yeah.
to a better financial footing. And so what you've seen through like Rocket Money or Credit Karma is additional functionality on top of the PFM tool. Things like we'll look at your transactions and we'll figure out where your subscriptions are. And if you want to turn those subscriptions off because you forgot that you have a Netflix account or you forgot that you've been paying, Sirius Radio every month, like we'll make it really seamless. You'll click this button and then, we'll deal with it. So I think they're still there, Steve, but I think like my own personal perception is like just that view in and of itself isn't enough. Like consumers expect additional functionality and value out of PFMs.
Yeah, makes sense. Yeah, you just need more. We just have to we just need to make it a bit more useful than we have
more
than we
agents,
have
more
in the
agents.
past. More agents, more agents. Yeah, yeah, yeah. I'm also curious because we've talked about 1033 and open banking and open finance.
Yeah.
If I give you a magic wand and you could basically create a federal regulation, to sort of um, uh, help standardize data, what would be that first sentence of that bill? What would be under?
Just to be clear, the magic wand only applies to this context. I can't use it for anything else. It has to
It's
be
only
about
this
data.
context.
That's a
It's
it's a
only
pretty
data. Yeah,
boring
it's only
magic
super
wand,
geeky
man.
data. Yeah, it is.
Yeah, it's a geeky magic wand. Look, I think it starts with the premise of like you own your data as a consumer, full stop, right? Like
Yeah.
you have the legal right to your data. It's yours. I think out of that flows any number of elements that like the market can deliver. But right now, we are still all kind of fighting's too strong of a word, but like we're arguing over who controls the
Mm.
data fundamentally, right? If I'm a bank, can I charge for you to share that data with a third party? If so, how much, right? Or do I have to make all of it available or can I hold some of it? And so if there was a law that just said, no, it's your data, right? And, if Steve decides that he wants to share it with a third party, that's his right. And if you hold the data, you've got to uh, comply with that right. I think it would unstick a lot of the uh, mess that we have in the US right now.
I had a joke about, do you think you're living in Europe? Is that, do you think they have an effective model for doing this, or are they on the right track?
Europe as a blanket statement is hard, right? Because it has not been applied evenly from country to country. They have a blanket data privacy regulation in GDPR. And, we all know that because when you're traveling in Europe, you get the cookie notification that pops up and we all just click accept and we move on with our lives, right? But
Mhm.
there is not like an open finance or a consumer data portability right that is as ubiquitous. Even on PSD2, which was the payment services directive that kicked off open banking, it's a very uneven implementation. And they've just transitioned now to the payment services regulation, which is the force of law, as opposed to PSD2, which was a directive for each country to then implement it itself. So, Now that I've been critical of Europe, I will also say they've historically been a heck of a lot further along on data protection and data rights than North America has. I think Canada's catching up quite a bit because, in addition to the open banking legislation that got royal assent earlier this year, they also did amendments to their privacy law, their federal privacy law, which gave a data portability right beyond just financial services. Now, it still needs to be effectuated and put into place via regulation and further statutes, but they're on the path now for a national data portability right. In the US, it's very hard to foresee anything like that coming to fruition in the near term.
Mhm.
What is the next big thing that could happen in the U.S. Or if anything, I mean, are the midterms just going to lock things up and nothing will much will happen? Or
Well, I do think we're going to see another 1033 rule from the CFPB, right? They've told the Eastern District of Kentucky that they are going to propose a new rule. They've committed to doing that. I don't know when that's going to happen, but
Hmm.
presumably sometime soon. Um, I think the market will continue iterating, right? So data access negotiations are happening between banks and fintechs to make sure that that data can keep flowing. The Financial Data Exchange, which is the technical standards body that's building these APIs and then giving them out to the market without any intellectual property attached to it, continues to iterate and is still the recognized standard in the US. And so I think you'll still see use cases come to market and data access terms be negotiated. Uh, I honestly don't know, John, if the midterms are going to have any effect here. It won't change the administration, and the administration controls the regulatory agencies who are governing all of this right now. Will you
Mhm.
see more like political attention in Washington to it? Maybe, right? Because it's a consumer rights issue and it's something that certainly Democrats and some Republicans care a lot about. But that may be more kind of headline specific than kind of ongoing cadence of like pragmatic change.
how much do you see it as a threat or opportunity or outside getting things are getting outside of the scope of regulated industries with things like private lenders or blockchain-based stablecoin yields, all these transactions outside of the traditional banking model.
Well, certainly it's something that we hear Jamie Dimon talk a lot about, right? As a
Mhm.
concern for him. Look, I will just
We'll
say,
we'll ask him next week when we have him on.
yeah, perfect. Yeah, I'd love to come back. Um, Look, I will just say my experience in almost 25 years of working in policy is the government will always find a way to bring things under its jurisdictional oversight, right? And so I think we're a little bit early in the cycle on things like blockchain or even private credit for that to happen. I think it will happen over time. You've started to see it in crypto world, right? You see the Clarity Act is on its way to getting passed in the Senate. That's the digital asset market structure bill that will bring oversight to the CFTC and the SEC over most digital assets. You saw it in the stablecoin bill with the Genius Act, which is now being implemented by the bank regulators. You see it at the state level, where a number of states are now passing laws amongst their borders to more heavily regulate out of state banks that are offering services to their consumers. And so I think, John, the House always wins, and the House is the government in one way, shape, or form.
So I shouldn't worry about the federal government and do they have enough power to regulate these things? They take care of themselves.
The federal government does a great job of giving itself the power to regulate these things.
Yeah, right.
It may not happen as quickly as those in business would be able to make change themselves. The government, the big tanker in the middle of the ocean, it takes a while to change. But I think if you look at the course of history, uh, the federal government has always ultimately brought things under its regulatory ambit over time.
Okay. So our fintech founders, anyone that's listening, you have some idea. Any final tip for well consumers or fintechs that you'd like people to know?
I would just say engage. Engage, 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 right? I mean, there's, we're poking a little bit of fun at government, but, I've worked with uh, officials on both sides of the aisle. I've worked with nonpartisan regulators. I've worked with elected officials. The one thing that's common across the board is they're really interested in kind of figuring out how to get this right. They don't know what they don't know, and they're very open about it. We work and live in a pretty novel sector. a lot of policymakers tend to be a little bit older, right, and don't engage in technology the way that younger folks do, but they have a very significant intellectual curiosity about it. Doesn't mean that they're going to ultimately come on the side that you want, right? But there's a real interest in like having people come in and show the novel use case that you're building. Tell me what you're doing for consumers who live in my state or my district. And so, look, I know when you're a fintech founder and you're building a company, coming to Washington or going to your state capital is probably not high on your list of priorities. But I will tell you, there is a very, very hungry audience to kind of better understand this space in advance of the rules that are coming at some point in the future.
How does Facebook make money? We shall add Senator. That's what this reminds me of, that fun exchange, right? Yeah, so it seems like there's a willingness to help, but sort of maybe sometimes a misunderstanding or a lack of understanding in terms of the effects that this has on fintechs. Is there a rule that you think any up and coming consumer fintech should be pushing for in terms of data regulation or privacy or how data moves around? They could help increase competition, you think?
Yeah, two. Well, one is obviously the 1033 rule that the CFPB is going to rework, right? That's coming at some point, and so I think the more fintechs that weigh in, I think the more impactful. But over time in Washington, there's been a lot of talk about a national data privacy framework and a growing recognition that like whatever your politics are, a 50 state or 50 state plus several territory framework just doesn't work, right? If you're a smaller fintech, how in the world can you comply with that? And so you're just going to concentrate more, tech power. And so we've seen, even in the last couple of years, like the two parties coming a little bit closer together on what a national framework could look like. That's another one. I don't know that it's imminent, Steve, but like that's one where at some point we're going to get over that hump. And I think we're going to have a national data privacy framework that would preempt state law, I think. And so getting engaged there, or at least paying attention to it, feels like an important one for most fintech companies.
Engage,
Yeah.
makes sense.
Yeah. So they're going to be watching your Venmo transactions, Steve P. Just start to be careful now.
Hey, as long as they're watching it and contributing to it, John, no problem at all.
Yeah. If you're honest, Steve, yes.
If I'm honest, yeah.
So thanks so much for this information. A lot of issues that we're kind of wondering about for a while. So thanks for bringing some clarity to that, and keep up the good work.
I appreciate it. Thanks for the invite, guys.
Yeah, thank
Thanks,
you.
Steve.
That's Steve Boms, the executive director at the Financial Data and Technology Association, but you can just say FDATA. And thank you so much for listening. Please hit subscribe, and we'll see you next week.